Welcome to Everything Money. In this video, you will learn about Plug Power. We will look at the financials and take a fundamental analysis of their numbers using our software. We will show you what you should be paying for this company in the future using our stock analyzer tool. And if you're looking to trade Plug Power at a quicker pace, we will head over to Mob at the end of the video and show you the trends and charts. But first, why should you watch a video like this? I bring your normal person questions to a couple guys that maintain and manage a portfolio of over $100 million in real estate, businesses, and stocks, and they will give you our insight on whether you should be investing in a company like Plug Power. Paul, what do you think?
All right, Seth, thanks very much. So guys, before we go further, follow us on Instagram, follow our new Everything Money account, Everything Money Investing, and then follow our personal accounts because our egos are very fragile.
Yes.
And our mothers braid us if they don't grow. So anyhow, Plug Power, this is our Everything Money software. Let's go look up on our 8 tools, Plug Power. Is it just Plug?
Yeah.
Yes. Okay, guys, so Plug Power is interesting. This is a company with $24 billion market cap. Now, here's something interesting, Uncle Seth.
Please.
Negative revenue, not negative profit, negative revenue. If you Google, why does Plug Power have negative revenue? Please Google that and let us know what it says. Guys, how does a company have negative revenue? Immediately, this is what I do as a value investor. And this is what other YouTube celebrities have duped you about. And if you're here because this makes sense to you, understand that you have to look at the income statement. To me, and to every good investor, Warren Buffett, Charlie Munger, all the good ones, Howard Marks, they always sit there and say, if I don't understand it, I don't invest in it. I don't understand
Plug
this.
Power stock plunge for the fourth reason. They said
Did you type in?
I did.
What did it
You
say?
ready? It says due to the effect of certain warrants, it has reported another quarter of negative revenue.
Yeah, I don't even know what that means.
I don't either.
And so what do I do immediately? Next company. So here's the process we're trying to teach here. A lot of the other YouTube guys that you go follow and you've probably been like, this doesn't make sense to me. They try to look and fall in love with the company first and then look at the financials. I do it the other way around. The way I look at it is this. If I fell in love with this phone before I knew the price, I'm willing to pay a much higher price than what's probably worth. Why? Because you fall in love. They want you to fall in love with the phone first. That's what marketing does. It wants you to fall in love. When was the last time you saw an Apple commercial where they said, here's the price?
And oh my gosh.
Never.
Yeah.
The only time they do it is when they announce the phone.
So in 2017, they gave warrants to Amazon. They granted Amazon warrants to acquire 53 million Plug's common shares. So
yeah, but what does it do with revenue?
it's kind of, you can think of it as a kind of a rebate looking for customers offered to Amazon to buy its fuel cells and services.
Okay, so I don't want to get myself involved in that. Does that mean it's not a good thing to look at? No, usually when there's more confusion, prices should be falling. So let's look at Plug Power stock. It has fallen a lot, right? It hit a peak of $75, hit a drop to 18. So here's the 52-week high and low.
Wow.
75 and 18. Okay, so there's some confusion here. But if you don't understand it, you don't invest in it. That's just the very, very first rule of all investing. If you don't understand it, you don't invest in it. The difference is a lot of people out there will say, oh, I understand this. Why? Because they did a couple of Google searches about it. I hear that now and I just go, I don't get that still. Could I understand it? Of course I could. I'm a smart guy. But I look at it going, investing isn't complicated. I shouldn't have to go rip everything apart to go, what is going? Now, does that mean when I want to rip things apart is when I see an opportunity in a company that I do understand and say there's a mispricing here. I don't understand this company, even in their best year. Let's go look at their best year.
Yeah, Paul, break this down for our new investors out there. If you've just gotten into the market in the past year, like a lot of this opened up when I became a business owner, Paul. I think normal people who might be working for a business owner can't comprehend the process of, I need to buy this business as a whole. What do they make? What do they do?
Okay, so if I asked you, hey, your neighbor has a company and they want to sell it to you for $240,000. And in the last 10 years, they've lost 7,100, 7,100, 810, 900, 1,000, 600, all these losses. Would you buy it? You'd be like, wait a second, why am I paying you all this money? It loses money hand over fist.
Because the future is exciting?
The future has potential to be exciting.
Telling me about that, Mo.
Yeah. It just, I mean, basically you're looking at this if you take the numbers out of it, you're saying that this hopefully works and does something and
guess
eventually
what?
makes money.
And
And it might.
It might.
Sure.
In 2000, a lot of internet companies had potential. We went and looked at the internet companies and we bought every single internet company that was out there. To today, you would have trailed the market. The market would have done 6.7% a year. You'd have done 3% a year. And at 3% a year, 80% of that gain would have been because of three companies: Microsoft, Apple, and Amazon. And Amazon, the best part is that Amazon growth, Amazon went from 113 down to 6 before it's gone up to 3,500. And if you tell me for 1 second that these hype YouTubers would have been buying Amazon at $6 a share when it went from 113 to 6, you're out of your mind.
I think in general, folks, here's the point of the show. You're going to see in the comments below people say these guys are fudding, these guys don't buy anything. And I actually embrace that, Paul, and that's the point, folks. Like, if you click around about exciting, growing EV technologies, hydrogen fuel cell companies, all you're going to see a lot of exploding emojis about how this is a 100x banger. And a spoiler alert, it may not happen. And so managing your downside risk is equally as important as thinking about a ticker price going up in the future. Can you elaborate on that, Paul?
Yeah, so the best value investors will always say that it's not about the home runs, it's about managing the downside. So for example, if you owe $100,000 and you take all these risky investments and it drops to $50,000, you got to double before it goes back to $100,000. You got to double before you're back to even. So if you can manage your downside where your downside's only $85,000, now you only have to go up less than 20% to get back to $100,000. Because most people, you have to be able to stay in the game in order to make a lot of money. Go read The Psychology of Money. It's all about staying in the game as long as you can. This is one of my favorite, it's actually my favorite book about money. Because it's all about staying in the game. And the longer and longer you have capital, the longer you stay in the game. And building wealth isn't about the returns you make, it's about how long you stay in the game. So it's about limiting those losses. Same with sports, right? The person who stays healthy and gets on base the most in baseball, or gets the most, what's it called? Receiving attempts or rushes, they're going to do the best over long periods of time. It's always funny to me. The best running backs are always the ones with the most yards. And then I look at the yards per carry and I'm like, shouldn't we care about yards per carry too? Mm-hmm. Same with points. Basketball. I can't stand Carmelo Anthony. I think he's absolutely overrated. Why? He takes 3 shots per game more than LeBron does and still doesn't. Yeah, I look at these things going, yeah, but he has to take like 3 or 4. Hey, give me 1,000 shots per game. I'll average 40 points a game. Put me in the NBA, just sit me in the corner, but give me 1,000 shots per game. If I just make 1% of them 3-pointers, I'll average 30 points a game.
Boom.
Right? So it's all about staying in the game, making wise decisions. The wise decisions you make based on a fundamental process will do the best over a long period of time. And every investment is the present value of all future cash flow. And the best way to project future cash flow is to look at the history. Does that mean always the case? No. But if I look at this, what makes me think this company's going to stop losing money? Every year for the last 10 years, this company's been making, and to be worth $24 billion, how much money does it make a year? $1 billion?
Yeah.
Guys, it lost almost $1 billion last year. So I look at this going, if you have 100 of these companies, you will lose a lot of money. You might pick the right one, it might go to the moon. But if you have 100 of them, you will lose money on 99 of them. You'll make money on one, and that one might not even account for the 99 you lost money on. That's the way I look at investing.
If you want to trade Plug Power at a quicker pace, you can join Mo in the Bidnass Nation, upper tier of our community, and he will walk you through trades like this. Go ahead, Mo. Look at these engulfing candlesticks.
This is exactly how you make money. You come over here to a 15-minute chart and learn how to day trade. You could be doing this in real time right now. Your stochastic is over 80%. You have great buying volume coming in, and you're getting engulfing candlesticks. I probably would have added to this thing, probably call it 41.75, and I'm still in this thing, and it's at 43.77 right now. So this is a perfect way to learn how to trade. If you want to make money on these companies, this is the way to do it. Come over here, learn how to 15-minute chart trade. Have a process. Don't just throw money into something and hope that it goes up every 15-minute candle. But and then your exit strategy is, as soon as this red line drops below 80% over here, you're exiting the position, you're taking your profits, you're going home, and you made a lot of money. If you want to learn how to do that, come join me in the Bidnass Nation. There's day trading seminars. I teach you how to do this. You have complete access to me, and you will learn how to day trade and make money on these crazy companies that don't make money themselves.
Final take on, speaking really to our new investors, final take on exciting companies that are being hyped up a bit.
history has shown that it ends up poorly over long periods of time. Like I just said, if you had Amazon, Microsoft, and
should I hit the crickets?
yeah, what was the third one?
Amazon, Microsoft, and Apple.
Apple in 2000. And by the way, Apple was considered dead in 2000, and Amazon the stock price made it look like it was dead in 2000. And Microsoft looked like the most amazing company of all time. And by 2011 and 12, it was considered dead. So unless you want to do those, even having those companies who all hit home runs in the next 20 years, you still underperform the market. Your call.
And the majority of those companies are no longer in existence.
Oh, and the other ones all went out of business.
Yeah, they're not here anymore.
Yeah, literally out of business.
That's our take. Be careful out there with these hype stocks. There's a lot of chatter about them, and we're always here to remind you to just avoid and be careful with these careful ones. So that's our take. Fondle thumbs up. Join the community. We'll see you on there. You can talk to us on a daily basis. And join Mo in the morning at 9 a.m. for news, analysis, and sarcasm. See you next video.